It's hard to believe that a $490 billion market cap company is under the radar, but it kind of is. We're paying so much attention to the banks. Let's really dig deep into UnitedHealth this morning. Your price target of $592 implies about a 12% upside. What are you expecting from this report?
Yeah, so I think the key things that everybody's going to be looking for this morning are going to be medical costs. As you look into this year, what we're starting to see is rising payrolls in hospitals and a loosening of the labor supply. Labor supply had really controlled medical costs the last 2 years. And so seeing if those are rising and if they're able to hit or even beat their medical costs, that'll be probably the most important thing for the name. Then the second thing will be their big services business, both their Optum Health unit, where they own doctors, and Optum Insights, where they provide data and information for the whole healthcare system. Both of those are probably set to beat for today. And so that'll be interesting to see whether they're able to beat just on the top line or if they beat on the top and bottom line.
All right, so UnitedHealth, just to clarify for the audience, gets about 80% of its revenue from premiums for its business. So are those premiums at all under pressure right now with the current environment, with a lot of, in some sectors, I know tech's a very small part of the economy, but some job instability in other areas where companies looking to cut costs?
Great question. So United is a very diversified managed care company. So while they have a really large employer health insurance business, they actually are equally positioned in the government businesses of Medicare and Medicaid. Actually, earlier in COVID, when we saw those really sharp job declines there for a number of months on end, we actually saw more members getting added in Medicaid than lost an employer for a name like United. So I think United is well positioned, not just for this quarter, but going through the year from a membership standpoint. Probably the concern there is going to be from a medical cost standpoint, making sure that you're really picking up the healthy members and they're moving over into employer or individual coverage as opposed to becoming uninsured.
So part of their business has become a bit of a political football. It's the pharmacy benefit management business that you're shaking your head. Yeah, it's becoming a bit contentious. It's something that's really catching the attention of lawmakers on Capitol Hill. Is there regulation risk there in the near term that investors need to know about?
Yeah. I think the PBM, with the pharmacy benefits management space, called the PBM space, I think that's right for regulatory and legislative changes. In general, I just had a big policy event last week. All the speakers were expecting legislation this year. What it would be focused on is not just transparency, but changes to business model that would shift from a kind of a hidden fee model, which is spreads, to a explicit fee model where you're charging admin fees. And my view would be anytime someone can see the fee, it's going to be less than a fee that can't be seen. So I do think that creates pressure. United is probably the best positioned of all the PBMs there because well over half of United's business in that space is really UnitedHealth Insurance as a customer. And so in this instance, what would happen is the PBM might make less money, but the customers will retain more. And so, the health insurance business will offset. So it's kind of moving money from one pocket to the other for about half of their business. Half will have the problem.
That's really interesting. So in your note that you put out, you're not expecting any big surprises, but any other metrics that investors should look at? Again, this is a huge company, about a $490 billion market cap. You can imagine it's in a lot of portfolios, not only for ETFs, but for pensions.
Yeah. I think the most important things to be looking at are going to be medical loss ratio and what medical costs are expected to do for the rest of the year, how they deal with guidance in that space. Second thing will be top line in some of the services businesses other than the PBM. And then the third thing will be membership, in particular, looking at membership in their Medicare Advantage business. Overall, I think probably the risks that we had coming into the year are really diminished for a name like this. That's in part why it's been up 11% over the last month.